2. Hello, this is Dave. Welcome to Equity Story. And he's back.
Oh.
The wolf.
Oh God.
The wolf is back, and
I'm back, baby.
he's back. And just before he starts, this is just general share advice and not personal advice. Wolfie, you've gone around the world. You've had your sabbatical. You sat on a mountain.
Mm-hmm.
You looked at the world.
Yes.
You've seen all the disasters going on around you. You've taken that time, that Buddhist monkey time.
Mm-hmm. Yep.
What do we do?
I tell you what, 6 weeks on top of the mountain, meditating, thinking about the world's events. Where are we going next? After 6 weeks, I've got no idea. I tell you what, there's so many things going on at the moment. It is unpredictable. And we've seen that over the last 6 weeks, market up, then down, then up and down, up 200 points, down 100 points. It's just been crazy. I mean, the key things for me, Dave, for the last 6 weeks, and I've been obviously following the markets while I'm still away. And I suppose looking from a different perspective, being in Europe, trying to see how things are going over there. But inflation is not going down. It is still persistently high. That's a problem. And I'll talk about another problem that might actually spike it even further, right, in the next short term. Yeah. So that's a problem. War in Ukraine, that's not going away. I think it's probably maybe even might escalate further, right, with what's been happening in the last 4 or 5 weeks.
Because you saw a little bit of that while you're in Poland, didn't you? Being arrested 3 times by being
wasn't arrested. They're looking for escapees through the Belarus border. So I was 3 times looking. I had to open the car. I had to say that I'm not Mohammed.
Yeah, I would. Because you look like you do look like the sort of guy that could be some sort of mercenary.
Hey, I tell you what, I look like an asylum seeker. I was so unshaven. I was just. I had torn clothes on me. It was bad. It was a bad look. So when they caught me, I can understand why they're going, come with me.
For sure. And when they saw they saw you an Aussie, they thought, yeah, you better come with us, mate. We know what you Aussies are like.
Yeah. Well, but anyway, look, it's been 6 weeks of thinking about where do we go now. And I think we spoke about it a little bit earlier before we went online. And I didn't pretty much do anything. I'm thinking that because there's still uncertain times, it's best just to be still. If you're in cash, sit in cash. Things are getting cheaper. If you've got a core portfolio, maybe sitting 50-50 cash, 50% stocks, fine. You can sit in there. We're getting close to the bottom. It might still go on for another 6 to 12 months. I don't know, but the thing is, I don't think there's a rush to get into this stocks at all.
Well, Wolfie, since you've been gone where I can't joke with you, I've been so worried about talking about the markets to our database. I've actually spoken to the CEO about maybe sending medication out to them all to give them uppers, because every time I'm doing a video to them, it's like, yeah, guys, sorry, the inflation, the war.
Same old, isn't it? Just keep reiterating the same thing every single.
And you know what? I looked at old videos that we did at the beginning of the year. Mm-hmm. And do you know what the talk was? What we talked about in February at the beginning of this year? All we spoke about was inflation, the issues in Ukraine, and the same old, basically the war stocks. I mean, it hasn't changed. Coal is one of the few areas. The lithium stocks are doing reasonably well. The story hasn't changed the whole year from these little areas, these little pockets where there's been a little bit of life. Woodside oil. The war stocks, it's still been the war stories. The war stories the whole year.
The war stories, the value stories, right? The stories that will survive a nuclear, pretty much war.
Yeah.
So, yeah, I completely agree. It's been a theme like that's going for the last, like you said, from February probably. And like I said, I don't think there's a rush. The problem is there is just no certainty when this is going to end, right, Dave? So, you're thinking there's still downside, and I probably agree with you on that. That there is no hope at this stage.
Well, you know what? Funny enough, Wolfie, I'm like I said, I'm not as. I think I've been bearish all year, and I think rightly so. And I still think the market's got further to go in this sort of October, November. But like I said to you, I think at the end of the day, as soon as we get to some really juicy valuations, you know, where are you going to put your money? I'm certainly not going to put it just, you know, in certain banks and worry about the world. Certainly the bond market scares the living daylights out of me. But and like I said, I mean, when's the time, you know, we start going into the best companies in the world, right? I mean, you know, look at Microsoft right down the two. I mean, surely, you know, any day, give me a Microsoft at a good valuation, give me a Apple at a good valuation, give me a Google at a good valuation, right? Give me a Buffett Berkshire at a good you know, this is where I think we've got to start looking, and also the good stories in our market, right? I mean, you've seen the Goodman groups get absolutely shellacked, right? The JLGs are going down, right? The good stories, the ones that we like, it's just an opportunity, and I think that opportunity is going to be sooner than we think. That's my feeling.
Yeah, look, definitely there'll come a point, and if you know if you bought, have been nibbling on these things, and I think, like I said, you got to nibble on the quality right here. Don't nibble on anything that maybe has got that extra high risk attached to it. The nibbling of the Microsofts, of the GMGs, I don't mind, but you know, I'm still really be prepared to be patient and wait, because they are still looking a little bit for especially when I don't have a time frame where I think we're going to have that inflation start to drop. I just don't see that yet. It's persistently high, so I'm just going to be waiting on the sidelines to see where it goes. And now, unfortunately, Dave, we've all got our portfolios, we've all got cash, and I'm prepared to take that pain, short-term pain, right? We're not gonna be making much money, but we're probably going to be losing stuff, and you know, we're not immune to being geniuses out there. But I'm happy, comfortable with sitting on some of these really good stories on my portfolio. But you know, I'm not buying at this stage. I'm just waiting. I'll give you a couple of things, other things that I'm really scared about, right? That we haven't actually mentioned yet, but it could even add more fuel to the fire. One is China, right? We haven't talked about it all, but we've seen that Xi Jinping, I think, is going to get another 10 years or life, whatever he wants to do with his running authoritarian, you know, China, communist, whatever they do. To me, again, that's a basket case out there. They're still pushing this COVID zero policy. I mean, he's shooting himself in the foot, really. The economy is tanking over there, and I don't know what they're doing. The actual populace is getting restless and more restless by the day. That's a trouble for me.
You're starting to see kids. I saw a kid would put a big banner, a poster out against the president. You don't often get that in China, do you?
That's right. And you know what? If they keep going down that path, and they're going to keep locking people up because there's a case here and there, there's going to be a mass protest, surely. I just can't see them going on forever like this. COVID is not going to disappear. That's over in China. You just have to live with it. I think, you know, everyone shows around the world, you just have to live with it. You have to get on with it and treat it as a, you know, an illness that's a little bit different than others. That's all. So I don't get China. This is the problem for me. It's a big part of the global economy, China. So if they start to splutter and get really into trouble, more problems for the globe, right? So that's one thing. The other thing I've been reading recently about is diesel, and we talked about oil, you know, spiking up, which is causing and adding a lot of fuel to that inflation bubble. Diesel, recently reading, is one of the most important parts of transportation, right? From ships to cars to other things that are happening around. Dave, we all know that transportation is one of the biggest parts of global economies. If the articles are correct and they're talking about there may be a shortage of diesel fuel and stockpiles are going down and we're getting to critical levels, I can see a huge spike in the diesel fuel prices, which is going to add more inflation worries. And you know, then you're sort of pushing yourself to think, how are we ever going to stop this bloody inflation monster? I don't know.
No, it's and again, you were saying when you're in Poland, shopping centers absolutely packed.
Yeah.
I was out in Homebush on Sunday with the one near there, which is like a discount shopping center, And I'll tell you what, I could not move in there. It was so busy.
So you can see the impact that interest rates have been put up already, not having too much of an impact, are they, at the moment?
No. Well, nothing. I mean, they sold a property down here in Manly on the beach
Yeah,
at a record
exactly.
price.
And that's scary, isn't it? I mean, when you've got interest rates going from 0 to say 3% already, and there's really not much difference going into inflation. Do we have to double that from 3 to 6%?
Well, I think, you've got some people with a lot of money. They're most probably thinking, well, Australia's a little bit, so over leveraged. I can take a mortgage out now, and I'm not going to be paying more than 5 or 6%, because if they put it up anymore, everyone's going to collapse in a heap. Now, I don't think that's the case. I mean, we could see people seem to be surviving quite nicely and doing reasonably well. So, interest rates could go up to higher numbers, Wolf, and maybe that's the catalyst. We do get this so-called recession that could be on the cards.
Well, I think it's inevitable globally. There's probably going to be recessions. The other factor that's probably playing against that inflation problem is the fact that the unemployment's so low, and there's shortages in certain industries. Right, people are crying out. Industries are crying out for more workers, especially in the countryside here in Australia. So it's just so many issues, Dave. It is. Honestly, I've been doing this for 20 odd years, and I haven't seen a time like this ever. It's just so complicated and so many moving parts to it.
Right. On that note, what's our advice? To go home, drink as much as you can.
I think, Dave, at the end of the day, I think we've said it very, very strongly. This is going to be an opportunity of a lifetime, right? At some point. So you've got to be still engaged with the market, see what's going on, see what's globally what's going on. And there'll come a point when we're going to go, we're buying lots of stuff. Even though we might be nibble here and there, generally speaking, we're patient. We are, sitting a lot of cash, and we are waiting for that moment where we say, that's it. We've got that turn. What the catalyst might be, we got to obviously see that inflation come down. I think that's probably got to be the key. What might drive that, whether it's going to be high interest rates or maybe the end of the war in Ukraine, I don't know, but we got to have to see that first, and then we're probably going to start buying big time. So
an opportunity knocks. Now let's talk about some stocks that put announcements out today. So Costa Group, again, more issues, and you always say never buy a bad report, and they had one a few months ago, and it just keeps on going lower and lower and lower, doesn't it?
Dave, it's a rule 101 in investing. All right, it's been probably proven many decades. Sell on downgrades, never buy on downgrades, and the opposite was true when you've got upgrades. You probably buy on upgrades and try and obviously pick some story up. So in this case, look, it's just a vicious circle, unfortunately, and that's the problem. It is very difficult to get out of it, also because you have to really almost stop like a big aircraft carrier, right? You got to stop it in its tracks. You got to possibly reshuffle the management. You're going to probably restructure the business. There's a lot of things that could go wrong. So for me, untouchable at this stage, CGC.
IGO. Sad news. They lost their CEO, a little bit unexpected.
Yeah, sudden death.
He's a very good CEO. Did a lot for women in the mining industry, which is good. So he's obviously a little bit forward thinking, and obviously not, like male chauvinist.
No. But look what he's done with their share price, right? I mean, you've got to be very happy with your shareholder of IGO. He's driven it from the 4s and the 5s to $15. I mean, that's impressive.
Yeah. So what I suppose they're a big company that they'll fill that role with. I think
the COO is kind of stepping up as the interim CEO, and they're going to probably work it out where to go from there.
Okay. CSL, Wolfie, had a good announcement the other week. I think the general feeling is that sideways, and it doesn't look too bad. The issue is haven't got much of a dividend on this stock. That's the problem.
No, so it's not attractive from that point. So that's why it's probably losing about 50% of investors straight away, because investors are looking probably for some income at the moment. But today's announcement, they've gone through their latest acquisition. and how it shapes up and how it sort of forms and falls into their whole business. And then they gave an update at the bottom, right, Dave? And with the business that they've recently bought, they're going to have about 12 to 14% growth. That's nice, for a business that is trading on about 30 times. Let me just have a double checking on what it's trading on at the moment. I think that's, it's a nice, CSL is starting to move in the right direction, I think, from the looks of things, but it's still probably a little bit expensive at 35 times. So it still it's catching up. It's been catching up for the last 2 years, right? It's been sitting around this level, about $300, but it was just too expensive. So it probably needs another maybe 6 to 12 months around these levels.
Yeah, and definitely one possibly that comes down to lower trend lines for a long-term investor. That's when you start nibbling, right?
Nibble. Absolutely, yeah.
Wolf TWR, which is a tower.
Yeah.
It's sort of not really trending, so it's not really interesting for us at Equity Story members. But anything interesting about this?
Yeah, look, it's an insurer. So insurance usually in inflation times does okay. And they've got an upgrade today, right? So from that point of view, it looks decent. I don't follow the story at all. I mean, I've got others, we looked at Ostbrokers and some other PSIs of the world, and we looked at QBEs, and there's a couple of others we looked at, Suncorp and so on. So look, it's one of the players in that space, but it's not, I suppose it's not trending. So I'd probably say pass, but one to watch if the share price starts improving on the next few weeks, because there could be more upgrades to come.
Well, for one, I think it is a nibble for the dividend, and I'm glad you agree with me, because I was talking about this as a nibble while you're away. Was Metcash? Again, I think it's giving 6%. Is it now? Sorry, 5.5%.
Yeah, well, if you gross it up, it's about 8%, Dave. So for those that can actually claim that back, franking credits, about 8%, which is bloody nice. And trading on 15 times. Update today, year-to-date group FY23 group sales up 7.7%. That's very nice. That's probably you could say almost the top of its class at 7.7%. I don't think Woolies or Coles is growing at that speed. So you got to like it, and they're transforming themselves. They've got very good businesses, and I like it. I think it's one of the, probably for me, if I'm buying something, I'd probably be looking at that or Coles.
And if you look at it, I mean, it's not the way we trend, but it's definitely a lot of support around there, isn't it?
Yeah, you could buy it for the dividend and treat it. Look at as, does it fit into that? We talked about before I left. Is it going to fall into that category of trending in a specific frame? And if it is, and I'm happy with it. Very similar, isn't it?
Yeah. What do you have Coles giving at the moment?
Let me have a look. So Metcash was 8, and Coles is, I think, a little bit lower than that. Coles is 5.4, and he's trading on 21 times. So as you can see, the preference has to be here for Metcash.
Yeah, but both interesting stories, definitely, right? So maybe
staples, Dave. War, not war. You got to eat.
Yeah, no, definitely. Wolf EDV, the Wolf's old sort of liquor.
Yeah, another inflationary type story, right? We talked about what does well in inflationary world. Liquor does quite well, strangely. You've probably got to get yourself drunk so you don't feel the pain as much. But if you look at the numbers for today, so they've come up with update for their own, the comparable sales growth. I mean, this is when you look at it, you think to yourself, this is all about expectations, because the numbers today went great. You've got first quarter sale retails down 6.2%, right? And retail comparable sales growth down 7.5%. So it's not as the headline numbers are not fantastic, but presumably better than expected.
CCR, Credit Clear. It's actually not bad looking chart, Wolf. It's sort of poked its head back up above the water level. Actually, I quite like it, to be honest with you, the chart. So why were you having a little bit of a move?
I had a look at it today because they came up with their quarterly, Dave. And, before I left, when we looked at this story, CCR, we thought, okay, it's probably, we're going to give it a bit more time because they are transforming themselves somewhat. becoming more of a debt collector. When you look at the revenues today, you've got annualized, right? I think today will come up with like about 7 point something million. So if you analyze it, you're looking at about over 30 million for 12 months. That's starting to look pretty decent as a revenue type number. Cash flow positive as well. So one to watch. I mean, that's why the chart looks a bit better. I think it's, one probably, if you give another good quarter right here, even maybe before the next quarter, if that's kind of breaks through that 53, technically for you, Dave, you're probably going to start going, yep, I'm happy to go for this.
All right. So tell me, why is Credit Clear looking so good when you've got the Wisers of the world? Just, I don't know if you've seen the Wiser charts, right? And you've got Wisers on their knees. I mean,
because look, first of all, very two different businesses, right? So one is in the fin space. Interest rates might not help Wiser, right? Going up. So that's the problem there. Well, CCI is just a debt collector, right? It's got a technology it's been obviously used to great advantage, picking up new clients and so on. So very different, although they're both tech companies in a way. This is obviously looked at two different spectrums. One is very, I suppose, linked to inflation, higher interest rates, possible problems, right, with people that maybe get into debt and so on. The other one is, like I said, different business. It's probably maybe okay in a way, growing quite strongly. So, yeah, that's the answer for that.
All right, really interesting. Wolfie, and then CXO, lithium. It's it's holding up. I think you've seen since you've been away, all the lithium players are haven't gone on with it, Wolf. But generally speaking, they've held up reasonably well.
Yeah, look, I was quite pleased. Just before we left, I gave you the top 10, I think, and I put PLS in there as my roughie, and that did very well. And until maybe the last week or two when it's sort of pulled back a little bit. So, it's still the theme there, I think. If you look at the general commentary and the bigger picture, I think still, lithium is still probably going to go quite well. There's a huge push towards electric vehicles, which are still the main battery they're going to be using are lithium batteries. We talked about some other technologies out there, but it's probably going to take a long time to maybe usurp the lithium batteries. But that's still a strong theme for me. So I would not be jumping off the horse yet. Just take some profits out of that. Yeah, look at that.
And the other one we're looking at is Min, because of the fact they might separate their assets. Now they're saying if they separated their assets, the lithium assets could be somewhere $40 to $60. So there's potentially a lot of value in this little MIN. So again, we spoke about that. I think we're trending it at the moment. I think it's an interesting stock to play this lithium story in at the moment.
Yeah, it's interesting, isn't it? How much value it's locked into MIN. And all of a sudden, when they talk about, we're going to demerge, everyone's, oh my God, it's got to demerge. It's going to have $40-50 on it. People never thought about it before when they didn't say they would merge. No. It's strange, but anyway, I like it. I think it's probably the right move, Dave, to trend this, because if they do demerge, you're going to have a lot of people piling into this.
Yeah, definitely. ELO. So a long relationship we've had with this story, and again, a takeover offer, private equity jumping in, basically trying to pick it up for nothing.
So opportunistic, isn't it?
Yeah, I mean, hopefully that's not going to happen, because people, mums and dads that have invested in this for years with this long-term outlook would be absolutely distraught.
Yeah, well, you can imagine buying at say $5 and they want to buy it at $3. It's heartbreaking, really. You're probably thinking to yourself, normal times, it's probably worth $5, right? Yeah, no. But because we're in the sort of times where growth and companies in this space, the tech space, have been absolutely shellacked. Unfortunately, they are being picked up on the cheap. There's nothing you can do about it. The only thing you can maybe do is identify some of these really cheap stories, like your Whispers, right, where it's 75 cents. We think to yourself, okay, if I'm crazy, I've got nothing better to do. And we've seen already a few being taken over in this space, right? They've been nibbled at by the private equity. that's the sort of stuff. And you think to yourself, it's going to be just going to be probably swallowed up at about $1 or something like that.
No, it's incredible. But also, Wolf, it shows. I'm not like giving the charts. Well, I am giving the charts, but it just shows when you're with these small caps and micro caps, you've got to play the technicals, haven't you? Because look at it when it went underwater at $6, because this is what can happen to these type of stories.
I agree.
You can't have that long-term view. It's very difficult to.
No, look, you get yourself into trouble if you do. And look, some stories you can go close your eyes and hope for the best, but you're still going to be losing money because obviously you're not listening to the charts. But what do you do? I mean, look, Dave, without the charts, you look at something like an ELO, you look at something like a Whisper. Fundamentally speaking, they are cheap, right? They are cheap. That's why the private equity is coming in and buying these things up, because they know 2-3 years time they're going to release these things again, put it back on the ASX, probably double, triple the price.
Yeah, it's annoying, isn't it? But
it is annoying. It is annoying because obviously we follow the charts, we follow the patterns, but it's just playing against us.
And PPS premium. I think more funds under management, was it?
Yeah, it does. There's a slight increase, 2%. Look, it's still good because in this possible time, you see a lot of outflows from a lot of fund managers and a lot of platforms, but PPS has still delivered a little bit of growth in this quarter, which is nice. So hopefully it can maybe sort of, form a nice base around 60 by the looks of things. So maybe they can hold that for the next few months.
All right, absolutely brilliant. And Wolfie, it's so good to have you back, champion. And we're going to be doing a lot of work together now with Claude. So, yeah. So forgive me because I'm calling Pete, Wolfie, and Claude together the dream team, and I'm going to have the dream team on Tuesday night together. So this will be the first time ever the dream team on together. So the amazing Wolf and Mr. Claude together. So that'll be a lot.
Dave, and I thank you for bringing up some special guests like Andrew, and obviously nice to hear Claude and so on. So it's just nice to hear other people's perspectives on some stories, some new stories that we haven't heard about, and some people telling you that charts are crap.
Yeah, no, they do. They both. You know what I love about it? They both hate the charts, and they're both gonna bring you back to the side of goodness and light.
I don't think I can go back to the other side. Can I? You've got me like holding on. Going, you're gonna be staying.
No, they listen. No, they're very confident. They can take you back to the light side. So we will see. And I would like that for you, Wolf. I don't want to.
Thanks.
I don't want to leave you in the dark side forever. On that note, listen, thank you very much. It's great to have you back, Mr. Wolf, and look forward to tomorrow. Yes, thank you very much, everyone, and thanks for your patience. I'm back, and tomorrow we're going to do a session, aren't we? Ask the Analyst on Tuesday. It's so good. All right, with the dream team. All right, thanks, Wolfie. See you, mate. Bye. See you, guys. Bye.